Morning, everyone. It's Chris from Solstice ATR as well as Excel. You can find us on the website as well as Twitter, Instagram, and Discord. Remember, we use this adaptive algorithm for side market, up market, as well as down market. Remember, we're not a broker dealer. Let's go to the first slide that I have up here on the charts. And what I want to basically do is cover some of the overall instruments in different sectors, part of growth, tech, consumer products, staples, discretionary, and so on. The most important thing is understanding the risk, large cap growth in relationship to VTV, gold, S&P 500, mid cap, tech sectors. You can take a look at the small cap as well as ITB, the builders, IEF, the bond sector, the VIX, the fear and greed, Bitcoin, as well as TBT for interest rates. I posted this and I put February 8th of 2025. Keep an eye on these sectors in case there is a change in the market. If we are selling due to inflation, change in politics, policies, as well as the different sectors that's happening because we had 3 weeks range bound. Let's go to the next slide. And what I put here, I put Charles Schwab large cap growth ratio in relationship to VTV. The reason why I did this, I wanted to show an overall view on when the economy from COVID-19 of February till March 23rd, they had issued $8.3 billion. And you can find this on US spending from the government as of September 30th of 2024, how much they spent. On the first round, they did on 2020 $1,200 write-off on your income as well. Per child, they gave $500. In December of 2020, they gave an extra $600 on the income as a write-off and $600 per child. In 2021, they did another round off on income in March of 2020, $1,400 on income, and per child $1,400. So we had a lot of spending going out instead of coming in, consumer products, staples, people spending money, going out and having fun. In 2022, the ratio fell down, and we had a bearish sentiment tone because we break that uptrend channel, and eventually we fell down until October. Then we started to break out in December. We rallied, and we are on that continuation. There was a little bit of fear on inflation. Is inflation gonna cause a problem again? This is very important. We're still in an uptrend from the October 2023 and 2024 lows in January, and we continued higher. We have never looked back ever since. So the most important thing, we had a small reset and a bounce off. Then we are coming here. This is the concerning area that I'm looking at as of Friday's close. If there's going to be continuation to the upside, or is this sell-off going to break this downtrend channel and the trend changes to the opposite side? So let's go to the next chart that I have up here. And what I did, I broke down Schwab large cap gross, the holdings in it, which is inflation, information technology, consumer discretionary, healthcare, financial, and so on. You can see the weight of this. Over 50% is in technology. If you look at the first 7 to 8 holdings in the Charles Schwab large cap growth, I did not take the Vanguard VTV holdings. I left it alone because this is more of a value play. I showed Apple, NVDA, Microsoft, Amazon, Meta, Tesla, Alphabet, and Alphabet A and C, and Broadcom. You can see the holdings are over from 6.7% all the way up to 12% holding, especially the heavyweights are in Microsoft, NVDA, and Apple. Is there a sell-off in these tech sectors? maybe just pay attention to the overall. Remember, this is for illustration use only. I'm not telling you to sell your position. You have to evaluate your own risk and understand what your term on short term, mid-term, and long-term holding. And at the same time, the VTV holdings basic material, you can see it's more diversified, but it's more heavier in the financial, healthcare, as well as industrial. So you have in there another 50% in holding, the weighted a little bit different than the technology sector. You can only see 10%. So we have to watch what the charts offer us and the technicals. Let's go to the next slide. And I did this in last week's video, and I did this in November, and I showed the November 30th of 2024 what sectors to look at for the coming year as well, end of the year. So I showed you two different ways to look at the overall holding, especially in the Mega 7 or the Fantastic 7. I have included Netflix in here. I usually include it because it is over 1,000. I do not include Costco in there. And I showed the Mega 7. Here are the S&P 11 sectors, the mid cap, small cap, and I put the dividend yielding account through Schwab. And I said, pay attention to the bond sector with the VIX, the rates, IGV, SVM, and gold and silver. And VU is the value play in relationship to all the currencies out there, but I did not put all. I put the Aussie, the British, the Canadian, the Japanese, and the New Zealand. I did not put the euro there. The E-minis in the S&P 500, NASDAQ, Russell, and the Dow. The bond, the 30 and the 10, gold and silver, Bitcoin and Ethereum. So we got to pay attention to Bitcoin and Ethereum if there's going to be a change in trend because the volatility has picked up in those two. Usually they are a little bit leading in Bitcoin in relationship, then the S&P follows the following week. Let's go to the next chart. And what I want you to remember, check us out, get in contact with us, give us your commentary, and let us know how we can help you out. Let's go to the first slide that I have here, and I put VU. You can use SPY. That's the Vanguard S&P 500. And what I wanted to show you from March 23rd till the December of 2022, that was the high. If I draw a Fibonacci or a measured move from high to low to show you that we did 150%. Either way, I caught it. You see it? It's 150%. We moved up 150%. When we came back in October down here, we came back 50% of that move down. Then we rallied back up and we broke out in 2023. 2024, we had that bottom and the rally to the top in 2024 of December on VU, which is the S&P 500. Or even if I draw it from the high and low to show you where the 50% is, it's identical to the charts when we look at technicality, understanding risk, and retracement in a Fibonacci. The most important thing is understanding risk, how to trade the levels, and be able to say whether I should be in a trade or I should not be in a trade. And I put VU up there on purpose to show the S&P 500. Now take a look at VTV on its own, and you can see VTV on its own. It was consolidating for almost 2 years from 2022 to 2023, and eventually we got the breakout in January of 2024, and we rallied higher and we reached the top. Now, are we in the sell-off after this dump here? We rallied up, but we're starting to see distribution up here on VTV. Let's take a look at the Schwab large cap growth, SCHG. I'm not going to use the dividend one. You can see it's in the same situation here after the rally in January. You can see that we are getting exhaustion. We double topped here. If this is going to be an M pattern, we've been consolidating on distribution. You can see that the volume here from this candle here, there was a lot of volume on the distribution side. Similar, whenever we get a volume pickup, you can see it down here. And here they brought the value, it missed the 50 SMA and rallied back up and continued above the 18 SMA, hugging those candles. We tested it once here, twice, 3 times, 4 times, and here we are already testing it. Pay attention in case of a breakdown. Let's go take a look at the and what I do please use the Russell mid cap instead of the MID I usually use. I'm going to show you IWP. And IWP, you can see it has peaked out in the Russell mid cap growth in there. So what we want to do is pay attention to this consolidation right here. I'm going to zoom it in. That was in 2022. This was the breakout. If you consider this is the cup, and this was a kind of a small handle here in the breakup. I'm paying attention to this big bar candle here in case we come back to retest F3 and F5 for consolidation in the 50 simple moving average on IWP. Let's take a look at the this ITB, and you can see in the ITB, if I zoom in here, if I consider this the shoulder, this is the head of it. Are we forming some kind of a shoulder? And if we lose the 116 SMA and the backside of this candle here and this low here, where we almost tested the 50 SMA, now the 50 is on top. The 18 is on top, but they have not crossed to tell me this is the death cross. But the sentiment showing that there is, in case the builders do lose it, do we end up coming back to the 200 SMA and this big consolidation on the backside of ITB? Let's take a look at XLK. And what I wanted to show in the XLK, I had put this chart and I've mentioned it a couple times. This is the cup, the handle, and the breakout in 24. You can see there's a lot of consolidation after looking at that 240 area, 238. We looked up, we double topped here. If I consider this third, but if I look at it, this is a double top. Is this consolidation here in the tech sector great? Is there buyers or is there exhaustion on the weekly on XLK? Because if I take a look at the SMH, the semiconductor, SMH, I can see that the SMH has been consolidating for quite a while since after the rally in September, coming down, creating a W. It has not been able to get out of its own way since the November, December, and now the January. It looks like there is a little bit of distribution on that hammer up here. But if the tech sector gonna save us and the rates are gonna change, does the Fed allow Trump 2.0 to do with his policies and be able to continue the way they want and be able to open up and crude stuff? Let's now take a look at the last but not least. I want to look at the IEF, which is the interest bearing account for 7-10 years. We can use the IEI or the ZF or the ZN or the ZB in the E-minis. What I wanted to show you here, since the 2022, we have not been able to take this out. We came down, rallied up. If this is the head, this is the shoulder, this is the head, this is the other shoulder. Are we creating another shoulder here in a zigzag pattern to eventually break out, reach the F5, F6, and we consolidate here to continue higher? If interest rates are going to come back down, I'm paying attention to the backside of this channel, F5 and F6, which is a 61.8 fib on the charts in IEF. Let's now take a look at the overall market in simplicity. So what I want to do is take the micro ES, the S&P 500. I'm going to show you how to look at the measured move, understand the risk, the retracement, and where we are today in the E-mini S&P 500. You can see I drew this level from here to here or to this here, and it shows the 150 retracement from high to low. Because if I take the distance from here to here, and I duplicate the distance from here to here in an oval, these distances that we traveled are all identical. This is 3 times the distance from the March 23rd till the December high in 2024, which was December the 16th. So from March 23rd till here, we 3 times moved up. And if I take a measuring tool to calculate how far we moved from this low, if I take this low here, and I go all the way to this high, it will tell me that I've done 248 bars. These are weekly bars, which represent 5-day trading. We've done 183% in the S&P 500. So this is a large return in the overall market. Can we retrace? Yes, I am paying attention to the 50 SMA on the weekly chart since we are keep testing the 18 simple moving average. Let's go to the daily chart right now. And what I wanted to do is narrow it down for everybody. We can see we came down in a downtrend. We were downtrending. Then we eventually broke up. We consolidated two-thirds of the move, tried to rally up, but we've been getting lower highs. I am worried if we lose the 50 SMA, there's nothing to hold us till the 116 in the backside of this channel and eventually catch up with the 200. This was the breakout here. It didn't reach it. This was the gap, rallied up, consolidated here, retested this breakout here, and rallied up. Coming back to this area, which we're going to move the oval, activate the oval. I put this last time here. It will catch up with the 200 SMA, which the S200 SMA will catch up with the backside of this channel and the consolidation right here on the charts. You can see that this oval will meet this consolidation where we broke out of that area in case the market does tend to change the trend. We are in a wedge. If I draw an uptrend channel here, we are in a wedge. Let's connect this dot here, control point to this. We are wedging, but we are getting tighter and tighter. And the 50 simple moving average, which is in yellow, and the 18 are starting to crisscross in case there's going to be a liquidation. The volume has picked up in this area. In case we cannot hold the 116 SMA, I'm looking for the backside of this channel on the E-mini S&P 500. Let's take a look at the NASDAQ to show the difference. The micro Q, you can use the QQQ if you want. You can see that there is more consolidation since December. We have not been able to take this high. And if I draw a downtrend channel from here to here, you can see that we are still in a downtrend. We retested it above on Friday, couldn't hold it, fell back down to the 50 SMA. And you can see that we are in that little tight uptrend channel in a wedge. On the upside or downside, we are in compression, looking for either a trend up or a trend down. Depends what the long-term showing downtrend. Midterm is up, long-term is up, because the overall week, if I add these candle, those 5-day candle, the NASDAQ closed on a green term. Let's go to the weekly to show you how it looks like. So you can see you had an inside day, but the candle closed on a positive note on the weekly. After the look down, came back up, but couldn't clear this one, but still on the negative overall week in the NASDAQ 100. Let's now do it on the SPY. I'm going to show you how to do the measured Y on the SPY and the QQQ so everyone can see it. We have the annual chart here on SPY. You can see that we have double topped. These are 3-week bars. So we're going to go to a daily chart to show you how it looks like. So if we take an overall view of those 5-day range, we were down, we rallied up, we came back in, but we closed negative due to this candle that brought us back down. We are below last week's range. So what I'm going to do, go to an intraday chart, go for 15 days. We're going to go for 6 hours to show you how to do the calculation. This is 6-hour chart, and you can see that overnight is the gray area. The dark black area is actually the trading hours from the New York Stock Exchange, the open of 9:30 till 4 p.m. or 5 p.m. It depends if you're trading commodities or not. You can see the 3 weeks in it range up, down, up, down, up, come back in. So last week's range, if I take from the Sunday low to the high, I'm going to go get it, the measuring tool. Where is it? Measuring tool, because if I take this low from here to this close here, you can see there was a 1.8, but from the Friday close, we are a little bit on the negative side. So we're going to go get the measuring tool, grab the high from here to this low, and this is my full retracement of fibs to the upside or downside. If I want to look for the extension for the 200 bottom or the 200 up or the 200 down, these are my measured moves to the backside of the channels on either side of those 3 weeks on the SPY. And if I put it on a 30-day, so everyone can see it, we can do, instead of 15, we can do 30-day. And what I wanted to do is show those levels, even coming back to this consolidator where the gap was. is okay in the S&P 500 to find support. If it's going to find support and U-turn back at the 61 and the 116 200 SMA and reverse back up, that is okay. But we had week down, week up, week down, week up. But unfortunately, every Friday, if you notice, we've been what? Selling off after the rallies. If there's going to be continuation, we're having lower highs. And if I draw a channel from here to here, we are in a linear regression side range market till we resolve out of this area. If everyone understands that, that would be very good for everyone to pay attention to this level between the high and low. And there's a midpoint. If I grab this and I duplicate it, so I have a linear regression now, uptrend channel, downtrend channel, and a midpoint where the support's supposed to be. If that support is broken, I'm looking for the 80% rule to see if I can get in here and bounce back up. If not, we look for the other side, either or. So let's take a look at micro. Or we can use the QQQ. I can use the QQQ to show you that it is in a similar situation on that 4 hour. Where's my measuring tool? I can take the measuring tool, calculate from high to low where my weekly is. And if I want to extend it to the left, I can, and I can go edit the property. I can move it back to the January if I want to. So I put January 1st, and you can see that the extension coming back to this consolidation where we looked under. Even if I push it a little bit more, and even if I go back another till 1, I want everyone to see this. So you can see where that consolidation look up, come back under, look up, fall back in, look in the same area. 1, 2, 3. This is a shoulder. This is a head. This is inverted. We rallied up, couldn't make it, fell down. So if I'm going to look at this now, I'm going to look at this high here, double top. This is a lower high, double topped here and fell back in. So this area here of this consolidation, the rally, this consolidation, the rally, I am paying attention to the overall measured move on the charts so that way I do not get caught, and I will draw an uptrend channel from that point to this candle. Even finding support here may be possible. If it doesn't, because we are in that symmetrical triangle, and I can grab this point to this one to see if I'm going to break above this or this, or do we come back 50%, because we are in that range for almost not just 15 days, more than 30 days back and forth in the NASDAQ 100. There is some kind of a trade off between all these tech sectors. And you can see here in the Mega 8, I showed NVDA was positive, Tesla was negative, sold off. Netflix was a little bit, Microsoft sold off, Facebook was positive, but Alphabet was negative after the earning. Amazon sold off as well as Apple. So if I showed you can see that it sold off. If I show Amazon, it sold off. If I show googl, it sold off. If I after the earning, if I show Microsoft, it sold off. If I show Meta, which is Facebook, still holding up after the earning, and if I take a look at NFLX, it's still holding, but it's getting exhausted, and I'm paying attention to that 1,000 area in case if it loses it, I'm looking for the backside of the 940 area, 935, for an opportunity to just grab it back for, a day, a couple of days trade. But if it breaks that area, does not hold, then we look for the consolidation down here after the earning report on Netflix. And let's take a look at Tesla. And you can see Tesla after the earning, we had that push up. We created a shoulder, a head, a shoulder, and we broke that neckline here. This is very concerning to me. I'm going to do it. It was a box. If I show you a box between here and here, we broke this neckline, which shows you the oval. If I do them like this, just to kind of give you a better view. Let's do it with, we can do it this way. I just want to show, okay, hold on. We'll do it this way so you can see that's the neck, that's the head of it, that's the other shoulder. So we broke that downtrend and we are lower. If there's going to be a snapback, I'm going to look at the overall distance between these levels to understand the risk if there's going to be continuation. Because I consider Tesla not a car company, I consider Tesla as a technology company due to the structure, the way it is built. Most people think it's just a car, but you have SpaceX, you got X.com, which is used to be formerly known as Twitter. So trade what we see, not what we think. And I hope this video was very helpful. If you have questions, check out. Remember, we're here to help you out. And what I wanted to do before I let you go, just to show you the daily, remember to mark the highs and lows of all the charts where the levels are, because this was the consolidation in this area. We tested this area, looked a little bit above. In case we fall back, I'm looking for this consolidation in this area. And what I want to do is put an oval here and change the color on it. So everyone doesn't say, oh, why is he doing that? And you got the 200 SMA. We're going to make this in dark gray. Edit the property. You can go to more. From more, you can put it in dark gray. So it's very little visible. And that's the area I would be looking for in the S&P 500 coming back in case things do turn south. If you have questions, let us know. Thank you. Enjoy your weekend. Enjoy the Super Bowl. Take care. Over and